The rise of Bitcoin, from pizzas to millions in 2010, Bitcoin was a fledgling idea, still largely confined to a niche group of technologists and cryptography enthusiasts. Created in 2009 by the pseudonymous Satoshi Nakamoto, Bitcoin was designed to be a decentralized peer-to-peer electronic cash system, free from the control of central banks and intermediaries. At the time, few could have imagined the profound impact this innovation would have on finance, technology, and global economies. But like all revolutionary ideas, it had humble beginnings. The genesis of Bitcoin. To understand Bitcoin's meteoric rise, we need to delve into its origins. Satoshi Nakamoto introduced Bitcoin to the world through a white paper titled Bitcoin, a peer-to-peer electronic cash system in October 2008. The goal was to create a currency that relied on cryptographic proof rather than trust, allowing transactions to be verified and recorded on a public ledger known as the blockchain. This groundbreaking innovation meant that Bitcoin could operate without a central authority. The first Bitcoin block, known as the Genesis block, was mined on January 3, 2009. Embedded in the block was the text, "The Times, the 3rd of January 2009, Chancellor on brink of second bailout for banks." This message served as a timestamp and a critique of the traditional financial system, which was reeling from the 2008 global financial crisis. For the first year, Bitcoin had no monetary value. It was primarily mined and traded among enthusiasts who saw its potential as a disruptive technology. But everything changed in 2010 when Bitcoin made its first real-world transaction. The infamous Bitcoin pizza purchase on May 22, 2010, Laszlo Hanyecz, a Florida-based programmer, made history by trading 10,000 BTC for 2 pizzas. At the time, this was a groundbreaking moment, as it marked Bitcoin's transition from an abstract concept to a medium of exchange with tangible value. Hanyecz posted on a Bitcoin forum offering to pay someone 10,000 BTC to order and deliver 2 pizzas to him. A user accepted the offer, and the transaction was completed. This event, now celebrated annually as Bitcoin Pizza Day, demonstrated Bitcoin's potential as a usable currency. However, it also became a cautionary tale. With Bitcoin's value skyrocketing in subsequent years, those 10,000 BTC would later be worth hundreds of millions of dollars. Bitcoin's early value and adoption. After the pizza transaction, Bitcoin began gaining traction. By mid-2010, Bitcoin was valued at around $0.008 per coin. Early adopters saw its promise, particularly in its decentralized nature and resistance to censorship. This period saw the emergence of the first Bitcoin exchanges, such as Mt. Gox, which allowed users to trade Bitcoin for fiat currencies. As Bitcoin's infrastructure developed, so did its user base. Miners, individuals who used computing power to validate transactions and secure the network, began to play a critical role. In Bitcoin's early days, mining was relatively straightforward and could be done using a personal computer. This incentivized more participants, further decentralizing the network. Milestones in Bitcoin's growth. 1. The first Bitcoin market boom, 2011. In 2011, Bitcoin's value reached $1 for the first time. This milestone was symbolic, as it represented Bitcoin's equivalence to a widely recognized unit of value. By June 2011, Bitcoin's price had surged to $31, driven by increasing media coverage and growing interest among tech-savvy individuals. However, the price soon crashed, falling back to $2 by November of the same year. This volatility became a defining characteristic of Bitcoin and would persist as it evolved into a global phenomenon. 2. The Silk Road era, 2011-2013. During this period, Bitcoin gained notoriety as the primary currency used on Silk Road, an online marketplace accessible via the Tor network. While Silk Road's association with illicit activities cast a shadow over Bitcoin, it also underscored its utility as a private, borderless payment method. By the time Silk Road was shut down in 2013, Bitcoin had cemented its reputation as both a revolutionary technology and a controversial tool. 3. The 2013 bull run. Bitcoin's price experienced another dramatic surge in 2013, reaching $266 in April and later surpassing $1,000 by November. This bull run was driven by increased adoption, media attention, and the launch of Bitcoin-related services. It was during this time that institutional investors and governments began to take notice of Bitcoin, sparking debates about its regulation and potential impact on traditional financial systems. From experiment to global phenomenon, as Bitcoin matured, it transitioned from a niche experiment to a global asset class. By the late 2010s, Bitcoin was being embraced by a wide range of users, including retail investors, institutional players, and even nation-states. The rise of institutional adoption in the mid-2010s, financial institutions and tech companies began exploring Bitcoin and blockchain technology. Companies like Coinbase and BitPay emerged, making it easier for individuals and businesses to buy, sell, and accept Bitcoin. By 2020, major corporations like Tesla, Square, and MicroStrategy had started adding Bitcoin to their balance sheets, citing its potential as a hedge against inflation. Bitcoin as digital gold. While Bitcoin's original intent was to function as a digital currency, it gradually evolved into a store of value, often referred to as digital gold. This narrative gained traction as Bitcoin's finite supply of 21 million coins made it an attractive hedge against monetary inflation. Its decentralized nature also made it appealing to those seeking financial sovereignty. Mainstream adoption and regulation. Governments and regulators worldwide began grappling with Bitcoin's implications. Some countries, like El Salvador, embraced Bitcoin by making it legal tender in 2021. Others, like China, imposed strict bans on cryptocurrency activities. These divergent approaches underscored Bitcoin's disruptive potential and the challenges it posed to existing systems. Bitcoin's value transformation. The transformation of Bitcoin's value from fractions of a cent to tens of thousands of dollars is one of the most remarkable stories in financial history. By 2021, Bitcoin had reached an all-time high of nearly $69,000, driven by institutional interest, macroeconomic factors, and growing acceptance. But Bitcoin's journey has not been without challenges. Its price has experienced numerous crashes, often triggered by regulatory crackdowns, security breaches, or shifts in market sentiment. Despite this, Bitcoin has demonstrated remarkable resilience, consistently recovering and reaching new heights. The legacy of the Bitcoin pizza. Looking back, the 10,000 BTC used to purchase 2 pizzas in 2010 serve as a powerful reminder of Bitcoin's journey. Today, those coins represent a fortune, highlighting the transformative potential of early adoption and long-term vision. More importantly, the pizza transaction symbolizes Bitcoin's success in achieving what it set out to do: create a decentralized currency that operates beyond the boundaries of traditional systems. It paved the way for countless other cryptocurrencies and blockchain projects, inspiring a new era of financial innovation. The future of Bitcoin. As we look to the future, Bitcoin's role in the global economy remains a topic of debate. Will it become the world's reserve currency? Will it continue to serve as a hedge against economic uncertainty? Or will it coexist with other cryptocurrencies and traditional financial systems? What's certain is that Bitcoin has already made an indelible mark on history. From its humble beginnings as an experiment traded for pizza to its current status as a trillion-dollar asset class, Bitcoin has redefined what money can be. And as technology and society continue to evolve, so too will Bitcoin's story. Bitcoin's price journey has been nothing short of legendary. From being a niche experiment to one of the most talked about assets in the world, its evolution tells an incredible story. Let's dive into the milestones of Bitcoin's price journey and see just how much your wealth could have grown if you'd invested early. 2010, the beginning of Bitcoin. $0.004 per BTC. In 2010, Bitcoin was essentially a digital curiosity. Few believed in its potential, and its price reflected that skepticism. At just $0.004 per BTC, 1,000 Bitcoins could be purchased for just $4. Imagine spending the cost of a cup of coffee to own 1,000 BTC. Fast forward to Bitcoin's all-time high in 2021 at $69,000 per BTC. Investment in 2010, $4.100 BTC. Value in 2021, $69 million. Yes, that's $69 million from a $4 investment. Early adopters who believed in Satoshi Nakamoto's vision reaped unimaginable rewards. 2011, the dollar milestone $1 per BTC. By 2011, Bitcoin started gaining attention among tech enthusiasts and cryptographers. It hit its first major milestone, $1 per BTC. This was the point where Bitcoin transitioned from being an obscure project to a financial experiment with real-world value. If you had invested $100 in Bitcoin at $1 per BTC, you'd have purchased 100 BTC. By 2021, this would be worth investment in 2011, $100, 100 BTC, value in 2021, $6,900,000 2013, the $1,000 threshold 2013 marked the year Bitcoin entered mainstream financial conversations. By November 2013, Bitcoin reached $1,000 per BTC, driven by growing adoption and media coverage. If you bought just 10 BTC for $1,000 in 2013, your investment would have skyrocketed by 2021. Investment in 2013, $1,000, 10 BTC, value in 2021, $690,000. This milestone cemented Bitcoin as a serious player in the financial world, paving the way for institutional interest. 2017, the first major bull run, $19,000 per BTC. 2017 was a groundbreaking year for Bitcoin. It surged from around $1,000 at the start of the year to nearly $19,000 per BTC in December. This bull run brought unprecedented attention, with media outlets worldwide covering Bitcoin's meteoric rise. Let's say you invested $10,000 in January 2017 when Bitcoin was trading at $1,000 per BTC. By December, you'd have investment in 2017, $10,000, 10 BTC, value in December 2017, $190,000. While many feared a bubble, others saw Bitcoin's long-term potential, setting the stage for its future growth. 2021, the all-time high $69,000 per BTC. The year 2021 witnessed Bitcoin's most significant milestone yet, an all-time high of $69,000 per BTC in November. Institutional adoption, increased retail interest, and the narrative of Bitcoin as digital gold propelled it to this level. Imagine investing $1,000 in Bitcoin during the March 2020 crash, when it dipped to around $5,000 per BTC. By November 2021, that $1,000 would have turned into approximately $13,800. For those who held on from earlier years, the returns were even more staggering. Bitcoin's long-term impact. Bitcoin's journey from $0.004 to $69,000 showcases its unprecedented growth and resilience. While early investors saw life-changing gains, it's also a reminder of the volatility and uncertainty inherent in emerging assets. Key takeaways from Bitcoin's price history: early adoption rewards. Those who believed in Bitcoin's vision and utility during its early days achieved extraordinary wealth. Patience pays off. The journey wasn't without setbacks. Bitcoin experienced multiple crashes, including losing over 80% of its value in 2018. However, long-term holders, HODLers, were rewarded for their patience. The future of Bitcoin. As Bitcoin continues to evolve, it's unclear what the next decade holds. Could we see another all-time high, all other cryptocurrencies take the lead? Final thoughts. What if you bought Bitcoin? Hindsight is 2020, and Bitcoin's price history is a testament to the potential of disruptive technologies. While most of us missed the opportunity to buy Bitcoin at $0.004, $1, or even $1,000, it's worth reflecting on the lessons this journey offers about innovation, risk, and reward. As Bitcoin's story continues, one thing is certain: its journey from a niche experiment to a global phenomenon will remain one of the most captivating tales in financial history. Imagine traveling back in time to 2010. Bitcoin has just been introduced to the world. It's worth less than a penny, and very few people understand what it is or its future potential. Now, imagine that you, with foresight, decide to buy 75,000 BTC for just $75, a tiny investment for what would become a monumental fortune. But what if you didn't hold on to all your Bitcoin forever? What if you cashed out at key milestones along the way? Let's dive into this alternate scenario and calculate how much wealth you could have accumulated. 2013, selling 25,000 BTC at $1,000 each. Fast forward to 2013. Bitcoin's price hits $1,000 for the first time. The cryptocurrency community is abuzz, and headlines start to capture the public's attention. You decide this is your first milestone to sell off some of your holdings. Selling 25,000 BTC at $1,000 per Bitcoin nets you $25 million. At this point, you've turned a $25 investment into $25 million, a staggering 1 million x return. With $25 million in your account, you're already among the wealthy elite. Perhaps you decide to buy a luxury home, invest in stocks, or even start your own business. Regardless of how you spend it, you've still got 50,000 BTC left in your digital wallet. 2017, selling 25,000 BTC at $19,000 each. Now let's jump to late 2017. Bitcoin experiences its first mainstream bull run, with prices soaring to $19,000. Media outlets are covering Bitcoin non-stop, and the world is becoming more familiar with cryptocurrencies. You decide to cash out another chunk of your holdings, 25,000 BTC at $19,000 each. This sale brings in a jaw-dropping $475 million. At this stage, your wealth has reached unimaginable levels. With nearly $500 million in hand, you can afford a lifestyle of pure luxury. Private jets, yachts, sprawling estates, and high-profile investments become your norm. You may even become a prominent figure in the tech or financial world, admired for your early investment foresight. But here's the kicker: you still have 25,000 BTC remaining. 2021, selling 25,000 BTC at $69,000 each. By 2021, Bitcoin hits its all-time high of $69,000. The cryptocurrency market is now a multi-trillion-dollar industry, and institutional investors have joined the party. You decide it's time to sell your remaining 25,000 BTC. At $69,000 per Bitcoin, this final sale brings in an astronomical $1.725 billion. At this point, your total earnings from Bitcoin have surpassed $2.225 billion. You've joined the ranks of billionaires, all from an initial investment of $75. The question is no longer about wealth but legacy. With over $2 billion, you could influence industries, fund groundbreaking innovations, or even establish philanthropic foundations to make the world a better place. The bigger picture: this hypothetical journey isn't just about numbers. It's a testament to the power of early investments and the impact of strategic decisions. Timing your exits can significantly influence your financial trajectory. While holding onto Bitcoin forever might seem like the optimal strategy, cashing out at key moments can offer immense benefits, such as liquidity and diversification. What could you have done with $25 million in 2013? In 2013, $25 million was a significant fortune. You could have invested in real estate, buying high-value properties in cities like New York, London, or Dubai. Entered the stock market, purchasing shares in tech giants like Apple, Amazon, or Tesla. Diversified into other cryptocurrencies, acquiring early stakes in Ethereum or other altcoins. What about $475 million in 2017? By 2017, $475 million would have put you in the ranks of ultra-high net worth individuals. Potential moves include launching a venture capital fund to back promising startups, building a diversified investment portfolio across various asset classes, making large-scale philanthropic contributions, funding education, healthcare, or environmental initiatives. And finally, $1.725 billion in 2021. With over $1.7 billion, your influence becomes global. You could purchase controlling stakes in major companies, fund ambitious projects like space exploration or cutting-edge medical research, shape public policy through impactful lobbying or advocacy. Lessons from the Bitcoin journey: timing is everything. Knowing when to enter and exit the market can significantly amplify your returns. Diversification matters. Even if Bitcoin is your primary asset, diversifying into other investments can secure your wealth. Think long-term. Patience and vision often yield the most significant rewards. Adaptability is key. As markets evolve, staying informed and flexible can help you make better decisions. Final thoughts: the story of Bitcoin's meteoric rise is one of the greatest financial phenomena of our time. While not everyone had the opportunity to invest in 2010, the principles of early adoption, strategic planning, and disciplined decision-making remain timeless. Whether you're exploring cryptocurrencies or other investment opportunities, the key takeaway is to think big, stay informed, and always plan for the future. After all, the next Bitcoin could be just around the corner, waiting for someone with the vision to seize it. The biggest takeaway isn't that you missed out on Bitcoin. It's about spotting opportunities early and understanding the power of long-term investing. When Bitcoin first emerged in 2009, few people could have predicted its meteoric rise. It started as an obscure experiment in digital currency, known only to tech enthusiasts and cryptography experts. By the time Bitcoin became a household name, many people lamented not getting in early when it was worth just pennies or a few dollars. But the true lesson here isn't about regretting missed opportunities. It's about learning how to recognize emerging trends and adopt strategies that maximize long-term financial growth. Whether it's cryptocurrencies, groundbreaking technologies, or other investment opportunities, the principles remain the same. Let's delve deeper into the key strategies for identifying and capitalizing on early opportunities while ensuring a sound financial approach. Spotting opportunities early. The world is constantly evolving, and with change comes opportunity. Identifying groundbreaking trends early requires a mix of curiosity, research, and intuition. Here are some ways to cultivate the skills needed to spot opportunities early. 1. Stay informed about emerging trends. To spot opportunities, you need to have your finger on the pulse of innovation. Emerging technologies, industries, and market shifts often signal where the next big thing will arise. This requires regular reading, stay up to date with reputable news outlets, industry blogs, and academic publications. Following sectors like technology, healthcare, and energy can help you identify trends before they hit the mainstream. Networking. Engage with communities that focus on innovation. Online forums, conferences, and meetups often bring together like-minded individuals discussing cutting-edge ideas. For instance, early Bitcoin adopters were often part of cryptography mailing lists or tech forums. Critical analysis. Not every new idea is a winner. Look for real-world applications, scalability, and the problem-solving potential of emerging trends. Technologies like blockchain thrived because they solved real issues in trust and decentralization. 2. Study past success stories. By understanding the trajectory of successful innovations, you can gain insight into what makes an idea take off. Bitcoin, for example, thrived because it disrupted traditional financial systems. Similarly, companies like Tesla and Amazon revolutionized their industries by solving unmet needs. Look for patterns, such as filling a gap in the market, addressing inefficiencies, offering superior convenience or affordability. 3. Take calculated risks. The early stages of any trend carry inherent risks. Many people were skeptical of Bitcoin because it was a new, untested concept. To succeed in spotting opportunities, you must be willing to embrace calculated risks. Do your homework. Don't blindly jump on a trend. Thoroughly research the risks, potential rewards, and competitive landscape. Start small, test the waters before diving in. For example, you could invest a small amount in a new technology or company to gauge its potential. Diversify your portfolio. One of the most common mistakes investors make is putting all their eggs in one basket. While spotting an early opportunity can lead to massive returns, it's important to remember that not every investment pans out. Diversification is the cornerstone of a sound financial strategy. Why diversification matters. Diversification minimizes risk by spreading your investments across different asset classes, industries, and geographic regions. If one investment underperforms, others may offset the loss. How to diversify effectively. Invest in multiple asset classes. Consider a mix of stocks, bonds, real estate, commodities, and cryptocurrencies. This ensures that your portfolio isn't overly reliant on one market. Explore global opportunities. Investing internationally can protect your portfolio from economic downturns in any single country. Include both established and emerging investments. Balance high-risk, high-reward opportunities like startups or cryptocurrencies with stable, blue-chip stocks or index funds. Example of diversification. Imagine an investor in 2010 who put $1,000 into Bitcoin and $1,000 into other areas like the stock market or real estate. Even if Bitcoin's value skyrocketed, the other investments could provide stability and long-term growth. Only invest what you can afford to lose. One of the golden rules of investing is to avoid overextending yourself. This principle is especially critical when dealing with high-risk, high-reward opportunities like cryptocurrencies or startups. Why this rule is important: high-risk investments are inherently volatile. While the potential for reward is significant, there's also a real possibility of losing your entire investment. By only investing what you can afford to lose, you protect your financial stability and avoid undue stress. Practical tips for risk management: set a budget. Determine how much of your disposable income you're willing to allocate to high-risk investments. Use stop-loss orders. For stocks or cryptocurrencies, a stop-loss order can automatically sell an asset if its price drops below a certain point, limiting potential losses. Avoid emotional investing. Making impulsive decisions based on fear or greed often leads to poor outcomes. Stick to your strategy. Real-life example: many early Bitcoin adopters treated it as a speculative experiment, investing small amounts that they could afford to lose. Even if they had lost their investment, it wouldn't have had a devastating impact on their finances. Have a long-term mindset. Investing isn't about quick wins, it's about building wealth over time. A long-term mindset helps you stay focused on your goals, weather market volatility, and capitalize on compound growth. The power of compound interest. Compound interest is one of the most powerful tools for building wealth. By reinvesting your returns, your investments grow exponentially over time. For example, an investment of $10,000 earning an annual return of 8% will grow to over $21,500 in 10 years and nearly $47,000 in 20 years. Patience is key. Resist the urge to sell early. Markets fluctuate, and even successful investments experience downturns. Selling prematurely can cause you to miss out on long-term gains. Reinvest dividends. If you invest in dividend-paying stocks, reinvesting those dividends can significantly boost your returns over time. Historical perspective. Bitcoin's journey illustrates the importance of a long-term mindset. Early adopters who held onto their investments through market crashes and volatility were rewarded with massive gains. Stay informed about emerging technologies. The pace of technological advancement is accelerating, and staying informed is essential for identifying future opportunities. Key areas to watch include artificial intelligence, AI. AI is transforming industries ranging from healthcare to finance. Companies developing AI solutions or integrating AI into their operations could see substantial growth. Renewable energy. As the world shifts towards sustainability, renewable energy sources like solar, wind, and hydrogen are gaining traction. Investing in this sector could yield significant returns. Biotechnology. Advances in biotechnology, such as gene editing and personalized medicine, have the potential to revolutionize healthcare. Companies at the forefront of these innovations are worth watching. Blockchain. Beyond cryptocurrency. While Bitcoin brought blockchain technology to the forefront, its applications extend far beyond cryptocurrency. Industries like supply chain management, real estate, and digital identity verification are adopting blockchain solutions. The metaverse. Virtual worlds and augmented reality are poised to become major economic drivers. Companies developing metaverse platforms, virtual goods, and related technologies could be the next big thing. Conclusion. The story of Bitcoin's rise isn't just about missed financial opportunities, it's a testament to the power of spotting emerging trends, diversifying investments, and maintaining a long-term perspective. By staying informed, taking calculated risks, and adhering to sound financial principles, you can position yourself to capitalize on future opportunities. Remember, diversify your portfolio to minimize risk. Only invest what you can afford to lose to protect your financial stability. Have a long-term mindset to weather market volatility and maximize growth. Stay informed about emerging technologies to stay ahead of the curve. Opportunities will always exist for those who are prepared to recognize and seize them. While you may not have bought Bitcoin in 2010, the lessons you learned today can set you up for success in the years to come. Thank you. Please like and subscribe my channel.